Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag, so let's bring in Andy Swan, co-founder at LikeFolio, to help us break down Chewy. Welcome back to the show, Andy.
Thank you for having me.
All right, so we're talking Chewy. As I mentioned before the break, this stock just off of 52-week lows. This one's been an underperformer, to say the least, down 25%. But looking back to last quarterly earnings report, Andy, this was a good number. Stock jumped, from $30 up to over 35 at one point. We're severely below that level now. Do you guys have data that's supporting this downside move that we've seen over the last couple months?
Yeah, we do. It's really a mixed bag for Chewy. I think, this is one of the best companies in the world at making their customers happy and creating, kind of that high retention subscriber type of customer. And so we think that side of the business is doing really well. What we're concerned with overall, though, is we're just not seeing traction in website visitors to Chewy. And this is one of our most highly correlated data points when it comes to, how many customers are coming into that funnel, how many customers are adding subscriptions to Chewy. And we're seeing that, down on a year-over-year basis, 8%. And that's concerning for us because, again, Chewy's best in the business in terms of, keeping these subscribers, auto ship subscribers, very, very happy. They've got a nice macro tailwind in terms of, the pet food business, and the online pet food and online pet supplies business is a big wind at their back. To see web visits down on a year-over-year basis, we find pretty concerning, and I think that's part of the reason why Wall Street may be shy to be big buyers of this stock. I think it's all about getting new customers into the funnel because this is a company that needs every one of those subscribers that they can get in order to expand, achieve, and really dominate profitability wise. They can definitely make customers happy, but can they bring new ones in the door? So far, LikeFolio data says not yet.
Yeah, Andy, something isn't right in all this rhetoric, because you read about Chewy, and it sounds like this area of the sector of the economy is expanding. It seems like they're getting a thicker piece of a growing pie, is the headline that I wrote. They've got cash to weather a storm or do an acquisition. They're a healthy company, but boy, this chart looks horrible. And it looks like a company that, the stock traded 120, now it's 27. It looks like a company that's in trouble. The stock is acting like that, but all the fundamentals of this company say it isn't in trouble.
Yeah, I think the one thing, and I'll just use a personal anecdote as to why I think, Chewy may be having less success with bringing people to their website and getting them signed up. And that is, I was a Chewy auto ship subscriber, and it got a little just crazy. I ended up with a couple bags in the garage, and you couldn't get the timing exactly right. And then I figured out with Instacart or something else like that, I could click a button and they bring me the bag of dog food from Petco or from Kroger, within a couple hours. And I didn't have to really rely on Chewy. And so as great as their customer satisfaction may be, as great as their customer service may be, it's really just as simple as, do I really need you to figure out when I need dog food or not? And I think that's what they're up against from the auto ship perspective. I think it's the proliferation of delivery on demand services that is actually competing with them, not necessarily specific to the pet food or pet supplies category.
I just went through that also, Andy. The dog food wasn't coming quick enough, so I had to order another bag. I got another one in the garage now, 60-pound bag of dog food just sitting there. But I do love the service, and you mentioned the happiness levels are really high on this company. They send you information when it's your dog's birthday and stuff like that. But when you look at the price of the stock getting oversold on a technical basis here, and then you saw last quarter, gross margins actually grew a little bit. Is this, based on your data and maybe what your earnings score is this an opportunity at this point? Because it seems like they're doing everything right. Is it that they have to cut costs? Because that seems to be the only thorn in their side at this point.
Yeah, I think that's the wild card, of course, that LikeFolio data does not have any insight into is, how much are they spending to acquire these customers? Maybe 8% web traffic decline is a good thing because they're spending 20% less to send people there. That's certainly possible. That would add to the profitability factor. But I think what Wall Street wants in these types of companies is growth and high growth, especially when you were once priced at high growth levels. And so I don't think Chewy will be able to deliver on that. And so I think, we're slightly bearish going into this earnings report. We got a little more bearish as, earlier in the week, the stock popped a little bit, giving us a little better entry. So we think the most likely reaction from Wall Street, unless they announce something big, is for the stock to move lower after earnings. But again, this is a great company. We really like what they do, and we're looking for opportunities to own in the long term. It's just not there yet.
All right, great stuff, great data. As usual, Andy, appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at LikeFolio, breaking down the data for us. He gave us, basically, their data is tracking what we've seen in the stock over the last couple of months here, Kevin. But that 25, just above $25 a share that it just bounced off a couple days ago, 52-week low there on that. I mean, it's